we saw this after Irma came through, where our townhomes that had those master programs basically got all brand new roofs, one adjuster, one policy through us, versus the ones that didn't were, patching here, patching there, and just turning into a complete disaster for management and the boards.
Hello, thank you for joining us for Policy Party. I'm Negar Sharifi, joined by my long-term partner, Phil Masi. In today's episode, we're going to talk about a question that comes up quite often whenever there's a claim, and that is, what does the unit owner's insurance policy cover, or what their responsibility is, and what the association's responsibility to cover in a claim scenario. So Phil is here to help me explain to you all this very tricky topic. All right, Phil, let's say our most common scenario, there's a pipe burst, okay? Water throughout the unit owner comes home, opens the door, water damage everywhere. The unit owner calls their insurance company to file a claim. What is their policy going to cover in that scenario with the damage?
Sure. So a lot of people get confused, think their documents drive this stuff. But in an insurable loss event, which I know we've tackled in prior scenarios, what's insurance versus maintenance, but an insurable loss event like a pipe burst, fire, lightning, whatever, the insurance requirements for a 718 governed condo association are going to be determined by the 718 statute. It doesn't really matter what the documents say.
So throw the docs out.
Yeah. So when it's a 718 condo in almost every scenario, your association is going to be governed by the 718 statute, and it determines who's responsible for what. And how it does that is the statute basically says the unit owner or the association is responsible for everything but, and then it carves out these 9 or so items that the unit owner is responsible for. We have a helpful cheat sheet that we'll actually pin to this that goes over just our own list of who's responsible for what to kind of help our managers. But generally, the unit owners are going to be responsible. In Florida, we're a bare wall state is what they call us. So the association's doing unfinished drywall and subfloor kind of out, and the unit owner is doing the wall and floor finishings inward. I mean, basically.
So paint and wallpaper.
Yeah. So you look at the paint on the wall, you have the drywalls, the association, or the ceilings, the association, but the popcorn on the ceiling, the texture, the paint, the wallpaper, the tile, whatever is the unit owner. And then unit owner's cabinets and countertops and window treatments and contents, obviously, for the stuff that's in there. All that's unit owner, and then association is that kind of, that bare walls structure.
When something happens, and let's say it's another unit's fault, the unit above it, I just had one this weekend, a fire. It was a stovetop fire. Is the unit owner, whose policy reacts to the damage within the unit?
So it's going to be both the unit owner's policy and the association's insurance policy. So both of those are going to react because they're supposed to work like this, right? So the unit owner's policy is covering these items, the association's policy is covering these items, and then they work together to fully cover the loss.
But can you explain, is it the unit owner that caused the damage? Is it their responsibility?
No. And so we've talked about this in a prior class too. Yeah. The unit owner, it's not a liability issue. We're talking about a property insurance claim. So if there's a pipe burst, it doesn't really matter who's at fault, right, to start. It's just the fact that there's a pipe burst. It's an insurance event. No different than there being a tornado that hits the building, which you wouldn't blame the upstairs owner on. Yeah. Now, obviously, there are things the upstairs owner can do that they would be negligent for a loss that comes downstairs.
And we have a class episode on that.
The association can absolutely, we get way into that where they can assess them and all those other things. So I don't want to say negligence doesn't matter, but for what we're talking about right here, which is just the difference between the master policy and the HO6, it's just who's covering what in the event of that insurable loss. And there's some cover, a gray area and cover. Now, I will say for dry out and remediation costs, because this is a common question that comes up, it doesn't say this in the statute, but typically we see the carriers do a 50-50 split on that. And it makes sense when you think about it, because if your walls are wet, how do I decipher the amount of the dehumidifier and water extraction that was done to the paint versus the drywall? I mean, you can't. So, or a subfloor versus the flooring. So usually it's an easy thing to just split it 50-50. Now, if the remediation contractor can get that detailed and actually split it up, then so be it. But typically you'll see 50-50 on that because it's just so difficult to try to peel that stuff out. So the dry out, split 50-50. Make sure your remediation contractors are taking only the cost for that unit and putting it in that unit. And you're breaking it out per unit versus just a total amount there. But that's I mean, that's really important on that piece.
And I think you've done a great job summarizing who's responsible for what. HO6 policy, which is the unit owner policy, versus the association. But one other thing that I'd like to discuss before we end today's episode is the confusion surrounding when a townhome homeowners association, meaning the name condo is nowhere in the name, it's an HOA, buys a master property policy. Does the townhome owner, even though they're not a condo, still purchase an HO6 policy?
So it depends. So what I would tell you is if it's a 718 condo, it's very black and white.
Yes.
We just kind of explained that. When it's a 720 HOA that has connected roof lines, connected buildings, and they decide to buy a master insurance policy just like a condo does, then typically what's in place is in their documents, because again, 718 statute trumps the condo documents, but a 720 statute says the documents drive who is responsible for what. So at a townhome, you would expect that the documents at some point have been amended either by the board or the way the developer originally wrote them that break out the insurance responsibility between the unit owner and the association. And a lot of times they mirror pretty closely to what the 718 statute says. So if you have 718 style insurance language,
meaning a master blanket property
your documents,
policy.
Where it says unit owner is responsible for and it carves out those interior items, then in that scenario, the unit owner at the townhome association only needs to buy an HO6 policy, which is just the HO6 means it's covering just the condo interior items. HO3 would be covering your roof and walls and things, and obviously more value than an HO6. So historically, an HO6 should be less expensive because you're buying less insurance. That has not always been like that because when the market got bad in Florida, a lot of carriers stopped writing HO6 policies and the rates kind of got weird. So you really want your agent to look at it. There is no problem with you continuing to buy an HO3. So I'll get that question a lot. Like, what if we buy an HO3? I don't care. Like it's then fine. You're double covering some stuff, but it's not the end of the world. Really, whatever one's less expensive, as long as the association's buying a master policy, I'm fine with them buying the HO6. And if you're a townhome and you're listening to this makes really good sense. It may sound like it's complicated, but you want the townhome to have the master insurance policy because what I can tell you is hurricane comes through, major hailstorm comes through, all the roofs get ripped up and destroyed. A lot of times these documents put roof replacement on the association, yet the insurance responsibility is on the unit owner. I don't know how you do that.
I know.
I mean, I've seen it in practice.
Because the association has no policy on the roof.
Well, you have 300 owners that have 300 different HO6, HO3 in that situation policies, and you're trying to go to an owner, let's say there's 8 units in the building, you need to replace that roof. The association is going to say, okay, the roof replacement is going to cost X, we've bid this out, but now you need each unit owner's policy to pay their percentage of that. And all I can tell you is it's impossible. I mean, like you're going to run into all kinds of problems. Owners that have no insurance, owners that aren't buying the right wind insurance, owners that have insurance, but the carrier is like, in litigation with them, refuses, doesn't say the damage to their roof's legit, which happens all the time. Deductibles that come into play that are wildly different. So trying to go with 300 different adjusters to come out and all adjust their section of a shared roof, it's not feasible. So every townhome, strong recommendation would be to buy a master insurance policy like a condo buys because it's going to protect the asset much more. And we saw this after Irma came through where our townhomes that had those master programs basically got all brand new roofs, one adjuster, one policy through us versus the ones that didn't were, patching here, patching there, and just turning into a complete disaster for management and the board. So that's a really important example. And the last thing I want to touch on before we go from it too is loss assessment coverage, because that's something that comes into this conversation a lot too.
Yeah. So, what is loss assessment coverage on HO6 policy? Yeah.
So an HO6 policy, but it's also on HO3. So anybody can buy loss assessment. So what that means is if there's a shortfall in insurance and the insurance carrier for the association is not able to pay for something, right? So the easiest example is, let's say the association has a clubhouse. That clubhouse, was insured for $300,000, which was way under what it should have been. It never had an appraisal. Really should have been insured for $1 million. Bad fire at the clubhouse, burns down, $1 million expense to the association. The association only gets $300,000 from their policy. They now need to assess the ownership for $700,000 difference. If you have loss assessment on your insurance policy and you buy a property policy, which obviously you would have in that situation for fire, your policy will pay whatever that assessment is up to the amount of loss assessment that you purchased. Where this comes into handy in Florida is in hurricane scenarios. You have oftentimes a large percentage deductible the association's paying. So there's the deductible piece. Let's say it's millions of dollars in deductible. They get less that money from the insurance carrier of the association, and they pass an assessment to unit owners. You can get the $2,000 a unit owner paid through the assessment, through that loss assessment coverage. So it's important to have, because that loss assessment coverage can kick in. Obviously, it covers your internal part of your unit, which can be damaged in all these type scenarios. It also provides liability coverage to the unit owner. Let's say someone slips and falls in their unit while staying there, or they have an animal or dog bite somebody, attack them. All these things can occur. So very important to have a proper homeowner's policy and making sure whether it's an HO6 or an HO3 in place, or if you rent your unit, you obviously have one of those.
And they're not that expensive, the HO6 policies. Well, thank you for joining us today. And thank you, Phil, for explaining the difference between what is covered on an HO6 condo interior policy and a master association's insurance policy. That's it for Policy Party.